morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Monday, November the 12th. Boy, I'll tell you, Hurricane Sandy really did a job on the East Coast. For those of you who live in the East Coast, I hope you fared a little bit better than I did. We had no power for almost about 2 weeks, staying in a hotel with my family until last Thursday night, actually. We just got power back at the office, and a lot of cleanup, big mess outside of the property. But nonetheless, we are back on live today. Thank God. Glad to be back. Going a little stir crazy. I'm sure everybody understands that. Today is Veterans Day. Happy Veterans Day for all of those who serve our country, all our men and women. Thank you for your service. Today is going to be light on a calendar day. As you can see here up on the board, we have nothing today. And then obviously things get more interesting as the week progresses. So we'll be interested to see what happens here. Now, while we were away, we did have a nice big sell-off right after the election. Prior to that election, really the markets have been chopping around, really doing not much of anything and waiting for the results. And some stocks and sectors were moving based on people putting a big bet that Mitt Romney was going to win the election. And you have these sectors that were sensitive, such as coal, running high. And then really when Obama got reelected, that sector and several other sectors really took a nosedive, and especially a lot of the dividend sectors, ETFs, such as utilities, because of this tax burden that's actually going to expire here. Now, we have a lot to talk about. We've been away for a couple of weeks, and the markets are really in a do-or-die situation right now. I did mention that we were looking at least one more sell-off prior to the end of the year, and it almost looked like we weren't going to get one. And then last Wednesday and Thursday and, of course, Friday, we did get that little dead cat bounce. Really didn't materialize much of anything. So the markets are very weak, and it is we are in a downtrend. So what we're going to see is where do we look for some sort of a bounce, maybe some sort of a capitulatory sell-off, and then we move higher going into the end of the year. Now, with this fiscal cliff looming, I all focus back on Europe and with Greece. Things could get a little interesting at the end of the year. So I wouldn't really factor in a big bounce as of yet. We really need to see the market prove itself that we are actually have bottomed somewhat, and then now we're looking to rally and at least try to retest some of the highs here that we've sold off to. So let's get right into the indicators, and then I want to get into the charts because we do have a lot to talk about. So as you can see here, we really didn't have much of anything today, a little bit tomorrow, and then it really gets interesting here with the FOMC minutes, initial jobless claims. That's always a big mover. CPI, Philly Fed, and then, of course, industrial production and capacity utilization on Friday. That's going to be really interesting to see what happens. So now let's take a look at our indexes and how it fared last week. Really, really terrible. All red here. Down 2%. NASDAQ, Dow, 2.72%. The NDX. Small caps, Russell, 2.38%. Semis got hit, and a lot of these other sectors here, as you can see. Banks, 3.33%. Commodities actually got clobbered. And, of course, the grains and crude oil actually ended up being up a little bit. And then you have some of the gold here for a safe haven play, silver as well, and the gold miner GDX. And I'm going to say that this is one of the plays that we're going to look for going into November and December is going to be gold. And I got a chart up of the GDX, which they fared to do better than the gold metal itself. Copper got clobbered here, down 1%. And, of course, our other little commodity sectors down below. But not a good week last week, and really it took a pounding the 2 days right after the election. So I want to jump into the charts, and I want to show you. Let's take a look at our sectors first and see how they did. And as you can see here, let me get that up. Everything is red. So consumer goods, industrial goods, conglomerates, services, healthcare, basic materials, all are not doing well. So this is something that's concerning to me. Did I say that it was to be expected? I did. I was looking for a move lower, but not that quickly. 2 days in a row while we were out of work. So that's unfortunate that we never really got a chance to capitalize on the downside. But I do think that there's probably one more downside push, and then a possible move to the upside. Going into the end of the year. But again, with Europe and the fiscal cliff looming, that could actually be negated. So we really need to watch price action. And really, as far as trading is concerned, I think day trades are going to be really the play here until things start to subside a little bit. And here's a sector view from our little bar chart here, just to show you what's actually gold did the best. And again, gold will be a good play going into the end of the year. Oil is actually doing a little bit better. Dollar actually favored well, and that's obviously put pressure on our commodities and equities. Okay, I showed you this chart, the NASI, the weekly summation index, with a 5.3 stochastic, really slow, and with a slow stochastic 5.3 for the week. And it actually does a really good job picking tops and bottoms. If you can see here, if you just go through this chart, and you'll see a little bit of, sometimes you get a little bit of whipsaw here, bottom, bottom, top, top. And I said about 7 weeks ago, I said, listen, guys, it looks like this, you put in a sell signal here. And right at the top, and nonetheless, we got a nice big move, 1, 2, 3, 4, 5, 6, 7 weeks the NASDAQ has been on a sell signal. And last week being the biggest. Now, as you can see here, we're getting oversold. And this is something that I want you guys to keep an eye on. All right, I would make the chart yourself. And once this thing starts to kick back in, I'd be looking for some sort of a bottom, of course, with other indicators as well. Okay, now let's take a look at our McClellan oscillator. This has not yet to get oversold, so there is still room to the downside, and I like to see this below this area here, 90, 80, 90, negative 100. That's something that I would be really look to see that maybe we have put in a bottom here. Okay, take a look at our VIX, and I had a big head and shoulders here, inverted head and shoulders here with a slanted neckline we broke out of. Now we have a little bit of a mini head and shoulders on the VIX. We have right shoulder, left shoulder, head, and right shoulder, a little slanted neckline here. So a break really above 965 would really put some fear into the markets, and then I could see us really starting to capitulate. And I like to see that. I'd like to see us break out of this Bollinger Band, and then get back into the band, and that would really give us a buy signal of the market, sell signal on the VIX. So keep an eye on it. You see it, we're getting a little bit extended. I think one more big push up would really give us the market sell-off that we're looking for, some sort of a capitulatory low, and then that would be some sort of a tradable bottom here. Okay, and that maybe we can start accumulating some stocks going into the end of the year. Shanghai, I've been mentioning this for quite some time. Really hasn't gone anywhere. Really chopping around at the lows here. Shanghai was up overnight last night, but really not giving us anything to really go on here. So this is something that, again, I'm going to be monitoring. All of these indices and key indices and indicators will factor in some sort of a bottom, that we have a tradable bottom in place. But until then, day trades is going to be favorable. And let's look at the BP SPX, bullish percent index. Still has room to fall, even back to the 50%, 40 percentile. I'd like to see this drop a little bit more before really get optimistic on the bullish side. And copper doing what it's doing, risk off, copper sells off. And you can see here Dr. Copper not giving us any sign that the markets are actually starting to move higher. So, again, guys, a bounce on Friday, all it was a short covering bounce. Matter of fact, a very weak short covering bounce. We gave back all of our gains to close moderately to the upside. All right, now let's get into our sectors. And as you can see here, this is what happened the last 2 weeks that we with Hurricane Sandy. Nothing at all happened other than a big pop-up going into Tuesday, and we sold off, and then that gave us our 2-day big sell-off, and then, of course, a little bit of a rally, which was faded and closed moderately positive on Friday. So really nothing has happened, to be quite honest, since we've been away, other than, of course, the big 2-day sell-off that we missed. Okay, now, let's take a look at the bonds, TLT. As you can see here, obviously, we get fear in the market, money rushes into bonds, and clearly we have this downtrend, and we broke out of this downtrend channel, and we did get above the Bollinger Band. So even if the market actually tested itself, it would logically test this upper end of this trend line resistance, which is now support. So a back test and then a possible move higher would probably is what I'm looking for right now. So I'm looking for further weakness. You can see here. Take a look at the FTSE. Now, this is the, FTSE, the Euro ETF, the FXE. And as you can see here, we broke the 38% retracement, and now we're looking at this little area of support, which would come in right into the 50 and a 61.8% retracement. So the Euro is a little bit in trouble. We are a little bit oversold, so maybe a back test up with some sort of a flag pattern into this area of confluence area of resistance, and the market would then look to sell it one more time before we rally into the end of the year. So I do see the markets a little bit in trouble, and I'll show you why. The 200-day moving average and most of these indices have been broken. The S&P 500, which is a follower, actually did one of just recapped it or actually closed right at it on Friday. Now, a lot of these annotations that I leave on the charts, I left on the charts here just to see where we go. And I did this drawing a few weeks back, and basically exactly what happened, what I did, and it usually doesn't happen that way, but we get a little bit of a flag, and then we sold off. And that's exactly what happened here in this price pattern with this big wedge formation or this upward channel. And we actually sold off pretty hard. So now, where do we go from here? Well, we have a breach of the 200-day. We're right at it, and most of the other followers, such as the NASDAQ, the Russell, and the transports, have broken way below their 200-day moving average, indicating to me that we are going to move lower. And until the market proves itself, I'm looking for continued downside movement until the market can chop around, find the bottom, and then create some sort of a base before we move higher. Now, we are oversold here, okay, but that does not mean that we are time to buy the market here until the market needs to really factor in a lot of factors here so we can prove itself and say, okay, now I'm going to be taking a calculated risk here, and I'm going to be looking to get long some stocks. And what we would do is we would get long some seasonality strength, okay, stocks that have seasonal strength here at this time of the year. And right now, what we're looking for is to take some day trades in and put some money in the bank. All right, so S&P cash. That's the daily chart, as you can see, at the 200. That's the only sector I'm going to show you that's at the 200. Here's another thing I like to do is the average true range, the ATR. And as you can see here, it kind of works really well, right? So we had market sold off, right? We had a market rally, which brought the ATR down to a low of 10. And then the market started selling off. The ATRs reached a plateau. We actually started keeping right. We were right in this area here. And then we sold off again. Market rallied. And now we're back up to this area. So what I'm thinking is that if I like to see with our indicators, right, with our indicators, the ATR reach right around this area and then maybe look to sell off again. And then this would probably put some sort of a market top. Now, my target, if you recall, I mentioned somewhere in the 1375 to be our first target. Now, we're right around 1379. So right up in this area here, I'd be looking for some sort of a tradable bottom, maybe 1350, between 1325, 1350, even right up in here. I would put this ATR back up. So this is a nice little clean chart, really shows you where we are here. So this is something to keep an eye on. 60-minute S&P cash. Now, we had some divergence, if you recall. We had some positive divergence, and we did here, and then now I'm looking for that, but I don't see anything in here in the 60-minute chart as of yet. Spiders broke the 200-day moving average. Heavy volume Thursday, Friday. We did get back up into this area, but we still didn't. We just closed right at it. So this is something that I'm going to continue to watch with the volume. But again, guys, clearly at the 200-day, not looking pretty. Here's the diamonds. Now, again, a follower, which is the Dow Jones ETF. 61.8% comes in at 126.40. This is probably where we're going to need to reach right in here to really get some sort of a bounce, to really shake out all the week longs. Not good. 200-day moving average, again, right here. So you can see the theme here. Russell 2000, 61.8%. 200-day. This is my target where I'm first looking for any kind of sign of a bounce. Okay, but really the markets are looking really ugly. And to really get that tradable bottom, remember, we need to chop around a little bit here. Okay, transports, really kind of quite boring, actually. Bouncing around here, 200 days, way up above here. We broke this little trend line area, so obviously next area of support would be right around 86, 88. Transport's not giving us any sign of any bullish indication at all on the markets. All right, now let's get to Apple. Apple. And these are my annotations from before. I'm going to remove this, but I just wanted to show everybody Apple. As you can see here, our head and shoulders target met. And now we're way down below here. I think you're looking at a 522 area before I would even look to buy Apple. Apple has really been decimated. Yes, it's oversold, as you can see here, down -5. But for me, I'd rather buy Apple down here, or I'd rather be looking to buy Apple bouncing around inside day, 2-3 days inside day, and taking out that 556. I'd rather buy it as the trend is moving higher. That does not mean that Apple even moves even higher. 200-day moving average is here. And if anything would bear flag, it'd probably try to make a lower high, a higher low here up in that 570 area then I would be more optimistic of buying Apple, but not until then. Other than create some sort of a flag, maybe for a short-term trade, but other than that, Apple's in big trouble. Okay, that means the Qs. Qs weekly chart. If you remember, we had this up. We had that doji, and I said a break below that 67.45 would actually give you a sell signal. Well, that took a few weeks, but then sure enough, we broke down below it right on this candle and produced a nice little trade. That's at least 3.5 points. Big weekly sell volume here, big distribution. So this is not looking pretty. We broke the 200 on the weekly chart, broke the 50-day on a weekly chart, not looking pretty at all. Daily chart, 200 bar moving average. Next area of support will come in the 61, 62 area, and that is going to be the Qs. Okay, whatever Apple does, the Qs does. So keep an eye on Apple if you're trading the Qs. Let's get into a couple of commodity sectors. USO, which is the oil ETF, and don't kid yourself. It's not just a pure oil play. They have oil services in that ETF as well. So sometimes if oil just is moving up or down, and the oil service sector is getting clobbered, so will the USO. So just keep that in mind if you're trading it. We're at support here. We are chopping around, okay, so trying to get some sort of a bottom. But if we do break this 31.20, next area is going to be the $29 area right in the USO. Lastly, guys, I know it's a little bit long, but I wanted to catch up on a bunch of stuff. The GDX, I like playing the GDX actually better than the gold itself, only because that usually GDX will get a little bit more strength. They'll follow suit a little bit quicker than what gold does. But when gold does take off, so does the GDX. And I like playing the GDX. And if you want to, you could even play the GDXJ. That actually produces a 4.5-5% dividend if you're looking to hold it for a swing trade. Might be able to grab a couple of bucks on the dividend side. All right, guys. Anyway, welcome back. I'm glad to be back and glad to be back at work here, going stir crazy. So we'll be doing our daily video segment every day. And thanks for your patience. I'm sorry that we've been offline for a couple of weeks. Hurricane Sandy really put a big damper on things. Welcome back, and I'm glad to be back as well. Be safe, guys. Make sure your stop's in place, and we'll talk to you tomorrow. Take care.